Hey Luke,
Nikita, how you doing?
I'm good, thank you. How are you?
I'm good. I'm very good. Can't complain at all.
Good to hear. Good to hear.
Well, why have you booked the call then? What's the purpose of the call? And I guess we'll go from there.
I've booked the call because it's about time I did something with my savings, to be honest, because I'm making no money in the bank.
Okay,
Um,
good.
yeah, I've been so basically, short update on me. I live in Australia, so Sydney, Australia.
Yeah,
I'm
see
from
that on.
London.
Yeah, that's quite
Yeah,
far.
yeah. Yeah, just a little bit away. So yeah, I live in Sydney. I've been here for the last 2 years or two and a
hmm
half years.
hmm
I worked really hard back in London and basically acquired a number of different, I guess, lifetime savings. And
Good.
then before I moved out here, it was do the thing that everyone says is good, which is put your money into property and settle down and not travel and see the world. And I think I freaked out. I essentially was going through the process. I put an offer down on a house and I
hmm
just felt this overwhelming, like, not fear, but this overwhelming stuckness that, like, oh my God, I'm now rooted to London. I want to see the world. What am I doing? So I kind of just moved it into a bank account that was, I
hmm
think it was at the time, it was like 1 year fixed or something. I don't even remember what the interest rate was, but it wasn't amazing. And I remember the interest rates were going up. I was like, well, I can't move my money because it's fixed in this 1 year.
hmm
And I've been here and I've been overwhelmingly feeling like that was a silly monetary decision. Like, it's not making much money in the bank. Yes, it's
hmm
safe,
It's
but it's
safe.
not, yeah, it's safe, but it's not going up. It's not accumulating. And
Yeah,
I'll be honest, I don't know much about, I think they should teach you in schools, but they don't,
they should.
about like financial health and the right things to do with your money to make
Yeah,
it build every year and make more. So I
absolutely.
think I'm at a point now, I'm 32, and I'm like, yes, I worked really hard to get the amount I have, but it's not growing. If anything,
hmm
I'm losing money by not doing anything with it each year.
Sure.
And I'm not a citizen of Australia, so I can't buy a place here.
Is
I
that
don't
how it
even ever want
works?
to be here. Yeah, you've got to be
Okay.
permanent resident. I'm going through the process of permanent resident at the moment.
Okay.
But I believe you can, but you pay a higher tax rate, which
Sure.
is
Okay.
why one of my questions I have for you today is what,
hmm
because I'm not a tax-paying citizen of the UK anymore. I
hmm
know also that I'll be charged a higher tax rate in buying back home and not buying where I am or where
Okay.
I'm a tax-paying citizen.
Okay. Yeah.
So I guess for me, it's being concerned that I'm not making more money on my money
hmm
and wanting to set myself up to be more financially free in the future.
hmm
And then also not loving my job. So again, being like, if I can start making money in another area and then be able to travel or do whatever I want to do, then that
Absolutely.
that would be amazing as well. So
Yeah. That
those are
makes
the two reasons. Yeah,
that makes perfect sense.
yeah.
I understand completely your situation. Okay, so I guess it sounds like you're more interested in buying than rent to rent, which is like a business model that we have as well, which is like a startup business for like renting properties and then renting them out for a bit of a premium.
So I'm not sure because even that, because like I'm guessing with the rent to rent, people do that because they don't have the money to be able to buy outright, right? Or take out a
I mean,
mortgage. Is that the reason why you do rent to rent?
we have both. I mean, when I originally started, I didn't have the money to buy, so it was a startup strategy for me. I only had like 6, 7 grand when I first started. But
Yeah,
we do have people that are high income earners who do have a lot of savings who have also come on the program as well, just because typically you can get more cash flow per month than a typical like buy to let.
yeah,
I think there's a bit more meat on the bone in terms of monthly income, but you don't get to benefit from the appreciation when the asset goes up in value because you don't own it.
yeah.
So it's more a case of targeting like old tired sort of multi-let properties, HMOs in the
Yeah,
UK for them,
yeah,
and then giving them a bit of a spruce up, maybe spending a few £1,000s on them in terms of tidying them up, improving the perceived value, and then renting them out for a bit of a premium price to like working people on placements, so like doctors, nurses, contractors, engineers,
hmm
people like that. There's quite a gap in the market for like that type of accommodation because those
hmm
types of working people, they go to an estate agent and estate agents typically want to do like 12-month minimum lets on
yeah,
properties. So those types of working people end up either going into a hotel paying a lot more than what you would charge them. So there's like a nice little
yeah,
gap in the market there in between the high street properties and then also the hotels, and you can sort of fit in between there and run a business.
hmm
And it's a good way of making a good monthly recurring income, you know?
hmm And that would be more for short term, you said, than long term, right? Because long term it would make more sense. with the appreciation of the property going up.
Yeah,
And I
yeah,
know, and again, I don't know the state of the market in the UK at the moment, but
that's okay.
I'm, I'm
It's
guessing
going
it's
up.
not a positive. Is it? Yeah. Is it?
Well, it depends what side of the fence you're on, doesn't it? You know, if if you're an owner, then it's great. You know,
Yeah.
all of ours are up 30% from when we first bought them in 2020.
Hmm.
And since then, you know, we've managed to get a refinance against them and get a new mortgage against the new value. So most of them were like 100 grand, 120 when we bought them. Now they're worth like 150, 160. And I've managed to get all of my capital invested back out of them.
Hmm.
So it's almost like I've almost got them for free in a sense where I haven't got any of my initial invested money in them anymore.
Yeah.
They pay me every month in recurring passive income, and they're
Hmm.
going up in value 5-6% every year.
Yeah.
Um, so it is definitely a game of putting your money where it's going to work harder for you,
Yeah.
whether that be in investing in buy-to-lets to get a percentage increase and get a recurring income from it, which normally works out to be a good buy-to-let's going to pay you around 10%. So if you put 30 grand down, you should be getting around £300 a month, roughly, in
Hmm.
terms of net income after all your costs.
Hmm.
And then you're also going to benefit from the appreciation, which is 5 to 6% in some parts of the
Hmm.
UK. If you look at Savills forecast, they're expecting like another 25 to 30% increase to 2029. So that's only like 4 years away.
Hmm.
Some areas in the northeast are like 30%, 33%.
Hmm.
So if you look at the appreciation and the income, you know, you're looking at sort of between 15 and 20% return on your money, which is a fair bit more than what you'd be getting in your high interest savings sort of account.
Yeah.
So it's definitely working harder for you in that vehicle. You either invest in that or you invest in your knowledge, your skill set, which is also an investment
Hmm.
because that's going to improve your skills and allow you to potentially build a rent to rent business that is going to give you an even higher return. You know, if you're talking about putting 5 grand into a tired rent to rent property,
Hmm.
and on average we make around £900 a month in profit. So at the
Hmm.
end of the year, you know, you're talking about 11 grand. Normally the deals are
Hmm.
over 5 years. So you can turn 5 grand into 50 odd grand over 5 years. Um, with having that skill set and knowing how to do it, you know. It's not just a
Yeah.
case of shopping around and, you know, the landlords just say, yes, here you go. You know, you do have to build your business out, develop skills in it, understand how to market yourself and how to pitch yourself,
Hmm.
what to say, how to say it. But I mean, that's all included in our program. That's our main core offer, really. That's what we teach people on a day-to-day basis.
Yeah.
Um, but I do also teach people how to buy their first sort of 1 to 2 buy-to-lets as well.
And I'm guessing the second option
Hmm.
is more of a lift, right? That's more time on my end because it's learning the skills. But in terms of if I wanted to do it as well as like almost like a side hustle, a second job,
Hmm.
that would be more lift than just doing the get one property, wait for
Oh,
it
for
to go
sure.
up. Then yeah.
Yeah, it'd be more aggressive in terms of a lift, like you say. Yeah, like you're going to get a higher return on your capital invested. Definitely. You know, I still have all of my rent to rents as well as building my buy to let portfolio.
Hmm.
We've got one like big sort of 10 bedrooms, like a block of bed sits, like self-contained flats, nothing fancy, but it was
Hmm.
very tired and old in the beginning when we first started, and the landlord was sort of fed up of managing it himself. We put around 6 grand into that, and we paid the landlord around 2 grand a month for the whole building. It's in Wales, so
Hmm.
it's a lot cheaper than London.
Hmm.
And then we re-rent the whole building out for like 500 per unit with all the bills included. So we make
Hmm.
around 2 grand a month on that building, and we have done for the last sort of 4 or 5 years.
Hmm.
So, you know, you
And you
talk
just
about
leave it there making it.
yeah, yeah. Well, it's because
Yeah.
they're all bed sits that it's pretty much, you know, someone leaves, someone else comes straight in because there's like a rental housing crisis anyway, in
Hmm.
the
Hmm.
UK. There's so many people looking for like affordable accommodation with all their bills included. And there's just not really much on the market for them. Most of the single let sort of 1 bed, 2 bed houses and flats get taken by families. So
Yeah.
for like individual working professionals, they're looking to save some money and try and
Hmm.
keep their rental costs as low as possible. You know, if they pay us 500, 600 a unit, then they're still managing to save a large portion, 70% of their income and manage to try and get themselves on the ladder at some point as well, you know, whereas if they
Hmm.
go in the open market, they're going to pay 800, 900 for a one bed, two bed flat and have to pay bills on top. So that ends up being
Yep.
like 1,000, 1,100. So there's quite a nice margin in between where you can
Hmm.
price your accommodation accordingly with all the bills included. And it works pretty well, yeah. So it's definitely more of an aggressive strategy.
Hmm.
Um, it definitely does involve more time in terms of building your business in the beginning. Most of my students are doing like 2 hours a day. That's what they're roughly average. That's how they build their business in terms of outreach. And normally, like when I first started, I was working part time, just like a little delivery job, and I was calling agents in the morning, sort of like half an hour on the way into work, and then on my lunch break, I'd be calling agents as well,
Hmm.
landlords, and just building relationships.
Hmm.
Then I'd go in on the weekends, maybe on a Saturday, I'd go and have a chat with the estate agents, sit in there, just let them know what we do, what sort of properties we're looking for. I did that for around 3 months before I got my first deal.
Hmm.
So there is a bit of that. But once you have lift off, you have your first one, you got like proof of concept. You can show like potential new clients your first property, get a recommendation from the first landlord. It's a lot easier once you get that first one.
Hmm.
And yeah, I think I'll always do it as well as buying, because the buy-to-lets that we have, we've got some doctors in there at the moment and some nurses, got some dentists, but they're all making on average around sort of 350, 400 a month, which is still great because it's completely
Hmm.
passive. Still works out to be 5 grand, 6 grand a year in some of them. But in terms of like making £1,000, £2,000 a month from one unit, it's a bit of a game changer in that sense.
Yeah. Yeah. To be honest, I'm probably leaning more towards buy to let, at least for my first venture. Obviously, the
Mhm.
hope is eventually pivoting out of the job that I'm in and
Yeah.
being able to do something like this full time. But I think also being situated in Australia, like
Mhm.
even where you said there, you jump on the phone, like we're in a completely different time zone. Like
Yeah,
it's
yeah, yeah.
9:15 almost in
Yeah,
the
yeah.
night for me. It's a
Right,
completely
okay.
different time zone.
Got you.
So I think it would probably be better. And also like, and again, I don't know if you know this, but like there's obviously more stipulations for the fact that I'm not a tax-paying resident of the UK
Hmm.
at the moment.
Hmm.
I don't know if it even weighs up making sense to do this because of
Hmm.
the increase that I'd have to pay in taxes
Hmm.
and things such as that. And I'll be honest, I haven't done my research
Hmm.
and I don't know if you know the answer to that question, but it has to make financial sense. And like, because I want to do it
Absolutely.
because obviously my money's making no money in the bank, but
Yeah,
equally, if it's stupid to do until I move home, because I know I'll move home at some point, I just don't know if
yeah,
that's a year down the line, four
yeah,
years down the line. I couldn't tell you.
yeah. Well, I think that's definitely something, and we should find out. That's like probably the next thing, we should Google for sure and get to the
Yeah.
bottom of. Um,
Yeah.
because that will obviously allow you to do the numbers properly and work out exactly, what your return will be. But I mean,
Yeah.
I still think it's going to pay off more than what you're doing now in terms of a return. Because like I said earlier, you're looking at 15 to 20% per year return on
Mm.
your money. And if you have to pay an extra stamp, an extra tax, stamp duty in Wales is 4%. It's just gone up to 5% in the UK, in England. Sorry, if you were to buy a cheap 120 grand property, 100 grand property, you're only talking about an extra sort of £4,000 to £5,000 on top.
Which would
Um,
be worth it.
well, yeah, because 1 year of rent will cover that pretty much
Hmm.
once you've
Hmm.
rented it. But then you're still getting to benefit from the 5, 6% appreciation every year, and you're in the game
Hmm.
then. So it's just going to keep growing every year.
Hmm.
So
Hmm.
it's a quite a high possibility that by 2028 you could take out 30 grand from the house, which will probably be the amount you put in between 30 and
Yep.
40, that type of house, and use it again to go and buy another one.
Yep.
And then each one you
And that,
buy will take you closer to replacing your income with passive
yep.
income.
My other question is how, because I've watched some of your videos and it's all about obviously mortgaging and then remortgaging.
Hmm.
Again, that makes it sound really simple, but when I went through the process, it didn't feel simple to get a mortgage in the beginning, right? Like there was lots of steps. They wanted to know how much I'd earned. There was all this document that I had to put
Yeah,
together.
yeah, yeah.
So like again, and this is a question for Google, but like me not being there
Or
in the
ChatGPT.
country or ChatGPT, like, is it going to be, am I going to be a tricky case to for most mortgage lenders, given I'm not in the country, given I don't know if they can get tax information from Australia,
Hmm.
like, am I going to be, I'm probably not going to be a safe bet. So that, there's also a concern in my head of, I don't want to land at a point where I've got a really terrible mortgage offer or deal because, and this is why in my head it was like, and obviously I'm learning now through watching videos online and stuff.
Hmm.
In my head, it was like, and this is a really backward way of thinking, but try
Go
and
on.
pay off as much of a property as you can.
Yeah,
So
yeah,
like if a property is 100 grand, try get to 80 grand. So you're only borrowing 20. And
yeah,
obviously now I know actually it would make sense to split that between two or three properties and don't put it
yeah,
all into one because how you can make your capital.
yeah.
But my brain was like, no, just keep saving and
Well,
saving so you
that's
can pay it all off.
yeah, that's what we've been programmed to sort of think over the years. You know, like our parents' sort of generation. You know, buy a house,
100%.
pay it off. You know, and then by the time you're 60, you know, you've got a paid off house and you can retire. Is their sort of
Don't ever
goal.
owe money, you know?
Yeah, don't ever owe money, right? But I mean, like, if you study the wealthiest people in the world, like their attitude to debt is a lot different. They see debt as like a tool rather than
Mm-hmm,
something to be scared of. I think it's a more of a poor person's programming, or maybe like a middle class slash lower class person's programming to think that
mm-hmm,
debt's a bad thing because it can actually
mm-hmm,
be a vehicle, like a tool to use to leverage to actually increase your net worth. You know, you've only got to look at like people like Elon Musk and people like that, you know, that they're in loads of debt, billions of pounds of debt.
mm-hmm,
But that debt allows them to grow and scale their net worth by building their companies out, by growing their equity within those companies.
mm-hmm,
I was reading an article the other day from Abigail Disney, one of the granddaughters of Disney, and that they do the same thing. They teach each generation to keep their assets and just get more debt out against them um, over time because the debt's actually tax free as opposed to realizing the gain, like in terms of selling an asset, you know,
mm-hmm,
you're going to pay tax on that. So whenever you realize a gain, you pay tax in the UK. In most places, actually in the US as well. I think it's probably the same in Australia. I don't know.
mm-hmm,
But when you keep the asset and get new debt against it, it's a way of getting a chunk of money back out of the asset,
mm-hmm,
whilst not paying tax because it's in theory it's a loan, isn't it? So it's not a
mm-hmm.
taxable event. So
100%. Sorry, I
so
was
that
writing notes because you said
no,
some
it's
really some good quote gems there.
no, it's good. It's
But
good.
yeah, I do think it is a reprogramming piece. It's like I said, they didn't teach us this in schools.
No, no, they didn't.
And
And
I, yeah,
the world's changed, you know.
hmm
Back in the day, you know, that was to a certain extent, that was how you built wealth. You know, you buy a house, you pay it off, and you know, you might, if you do well, you might own your car, you might own a nice gold watch or something, and that's it. You know, that's the
yeah,
dream. You know, but I think where the world's changed so much now, I think the wealth aspect of wealth has changed now as well. And I think wealth to me more so now is it's linked to obviously your well-being. And your
hmm
well-being consists of not just, you know, money, it's also like time and health
hmm
and you know vocation, passion, and these types of things are what really build wealth. And the best way to have your time is to have freedom, and the way to have freedom is to have assets that are paying you passively without you having to trade your time for money.
100%.
Um, so yeah, I do think that it's a good positive thing to do to buy a property. If you're in a position where you have that savings, I would always advise you to buy an asset because there are not many assets compared to the amount of people that are looking for them.
hmm hmm
And it's just a simple case of like economics, supply and demand. There's millions of people who want houses, not many people, well, not many houses available for them to buy.
hmm
And especially in the UK, you know, it's an island, limited space, you know, there's limited, you know, there's green space and things, places where you can't build.
hmm
Government always promises to build 300,000 every year. They never do.
hmm
And population's growing, you know, people need accommodation. It's just quite simple. Once you're in it and you understand it and you see it for yourself, I understand being on the outside of it because that was me 4 or 5 years ago. I didn't quite get how it all worked, but now I've been in it for sort of 5 years now, and I've seen, you know, the Zoopla updates every month come in. Oh, your house has gone up 1%, 2%. And I've
hmm
seen, you know, I have my own management company as well, so I rent them out myself, well, in-house. And you know, I put an advert up and I have 20 people queuing up to view it, and that's in South
Yeah,
Wales, which is quite quiet compared to England, London, you know.
yeah,
So I've lived in the, I can see how it's moving, I can see the crisis that we're in, and it doesn't seem to be changing at all anytime soon.
hmm
So I would definitely advise, you know, like for you to get your hands on something that will increase your net worth as an individual, and it will get you one step closer to potentially leaving your job at some point, because that passive income is an amazing thing,
Yeah, 100%. Thank you so much, Luke. Appreciate your time.
No worries, Michaela. Have a good day.
You too. Have a good one.
Bye. Bye.
Bye.